Probably one of the hardest things to do or get a hold of doing is trying to exit your holding at the right time. You always want to try to get the most profit you can, but at the same time, you don't want to lose money that you already have. So how do you exit a stock? There's really no right or wrong way to do it. Some people have a strict price target already in mind, and once that price is hit, they're out. Other people use some sort of percentage stop. So every time a trailing stop. So every time the stock keeps going up, their stop automatically keeps rising. So there's really no right or wrong way to do it. Basically, if you can avoid losing money, any money is good. So what I wanted to do is I wanted to quickly go over how I create stop losses for my more active trades, meaning stocks that I only hold a couple days. The reason I say more active is because on my long-term trades, they are more rigid. I do have a specific price target, and once it's hit, I buy out. So we're looking at Crocs, and the reason we're looking at this TD Ameritrade chart is because I was doing this trade from my iPhone, and the application I use is the one that's synced with TD Ameritrade. So this was the chart I was looking at. Anyway, so I was looking at the stock, and when I first do an analysis over the stock, I don't do a day. I don't look at a day chart. I look more like a 3-month, 6-month chart. But the reason I'm looking at a day chart right now is because when I want to look at a stock, particularly when to exit, I want to measure the momentum. So I want to measure the day momentum. When the stock's gone up, when the stock's gone down. So even though the momentum might look like it's over now, long term, that doesn't necessarily mean the momentum's over. But do I really want to hold on to the stock longer? Because how much is it going to really do? Anyway, so I was holding on to this stock for about, I think, the last 2 market days, and my initial price target for the stock was 220, but the stock had only reached, I think it was Friday, it had only reached 217. So it never hit my 220 price target, so I wanted to hold on to it. And so it went down, it came back up, and finally today it came above 220. So since that was my initial price target, instead of buying out at 220, I create a stop order, meaning when the stock hits 220, I create an order for the stock for TD Ameritrade to do something. So in this case, once it passed 220, I set a stop market order for 220, and so if Croc came back down below 220, it would automatically be sold for 220. So we create 220 as the original base. Now, what I could do, I could just be happy and leave at 220 and walk away, but you don't know how high the stock's going to go. If the stock was just going up to 225 and back down to 220, it's that's fine. But eventually you see that the stock came all the way up to 252, I believe. So if I waited for 220, I might still be in the stock, after the market closed, and who knows what happens after the market closed. So I watched the stock, and you see how it initially jumped up to 232. And so what I like to do is I basically like to move it up into increments of 5. So the stock was going up between 227, 228, up to 230, and it was kind of moving in between that 226, 230 phase. So what I did was I moved the stop up to 225. So you can see that the momentum was, I believe that the momentum was past 225. So I kept the stop there. So what that means is that I believe that if the stock came below 225, the momentum was over and I would get out. So the stock came back up above 225, and it went right over 230. So I moved it now to 230. So now I think that the momentum goes below 230, it's over. And you see the stock goes all the way up to 240. And at this point, it moved between, I believe, 237, 238 for a long time, 239. So I moved up the stock the stop to 235, and now at this point, I want to. I kind of want to just get out of the stock now because I feel that the momentum is, even though, see, you can see the momentum going, you see right here, it wasn't going as fast, and then suddenly it just started jumping. So you want to move, so I wanted to move my stop quicker because I didn't want to lose any profit. You know, I'd rather keep the profit I gained than risk losing any. So it got up to 235, I had my stop loss at, and suddenly the stock came all the way up to the top, and it started playing around 241 to 243. It kept bouncing in between that. And I kind of felt that it was going to be my last chance to get in at 240. Otherwise, I would have to take it at 235. So I put in a stop market loss for 240. And literally right when I did 240, it hit. I got stopped out. And it was great because we got into the stock at 180. 183 specifically, and we got out at 240. So you know that's a good 58 or 57 cent profit per share. And so you see the stock eventually came up to 252. So I could have played a little bit with it more, but you know, I mean, you're never going to be perfect on this. It came back down. Obviously came back down. I didn't really watch the stock after I sold it, but finally it ended at 234. So even though the stock went up higher, at the end of the day, I came out on top. So there's a quick look at how I use, how I exit stocks, more specifically, more active trades. Obviously, it's not really mathematical. It's not some dictionary way, some textbook way, but it's the way I like to do it. Obviously, not everybody has time to sit and keep moving it up, but I was doing this through my iPhone, so there are apps that you can do this from wherever you're at. So what kind of trading and exits do you have? Do you think this is a stupid way to do it? Let me know what you think. Thanks.